All right, now whether the market rally at the index level fizzles or not, there's still enough within this market, stock-specific action that's been driving the broader markets. One of the set of stocks, at least, which was gaining significantly last week was rubber stocks. Rubber prices had come off, tire stocks, sorry, apologies there. Rubber prices had come off, and which meant that it was a positive trigger for companies like CEAT. That's the 1 week chart on CEAT, up almost about 13% flattish today, though. The management of CEAT is joining us to talk about business. Paresh Chaudhary is Managing Director at CEAT, joining us this afternoon from Mumbai. Very good afternoon to you, sir. Thanks so much for joining us. Let me get your thoughts firstly on what's been happening on rubber prices and what it means for companies like yourselves. They've come off significantly, so a natural positive for you?
Good afternoon. Rubber prices have come down to some extent. They saw a peak of about rupees 240 in Kerala, and today's price is about 210. So about 30 rupees have come off from the peak level, and this helps us quite a bit. 30 rupees makes a lot of difference to us, but rubber prices are still very high, considering that about 20 months ago rubber was trading at about 80 rupees and it jumped to 240 in about 18 months time. So 240 to 210 correction is okay, but we expect some more correction, and let's see how it spans out in times to come.
Sir, but what should we look at as a sort of an average pricing over the course of the quarter, which has just about ended, and then how does it play into realizations? It would sort of mean that margins for you would look significantly better then?
Look, for the quarter one, I don't think anything can happen, because we all keep at least a month's stock of rubber, and the prices have declined only in the last few days, maybe last 2 weeks. So it will not make any great difference to quarter one. But in the second quarter, it will start making a difference. Right now, the quarter one story is all over, so you will not see any improvement in the margin in quarter one. Our margins over the last 6 quarters have declined progressively from about 15% to only 2%. All this was the result of rubber prices and oil prices. Now both are cooling off, but Q1 will not see the benefit of all this. The benefit will be seen more from Q2 onwards. And specifically for CEAT, we have our new plant at Baroda, which has just gone into production. So the impact of interest and depreciation of that plant will also hit us in the quarter one, because the capacity utilization in quarter one was quite low, and from quarter two onwards the capacity utilization will be better. So on both fronts we expect things to improve from quarter two onwards.
Okay, so I know this is tough, and I'll get to the Baroda plant in a minute, but in terms of where you think the margins could stabilize or the rubber prices could stabilize, on your own assessment of demand supply dynamics in the global markets, what should we work with as a sustainable margin level, say from Q2 onwards, even if it doesn't come in Q1?
First, talking of the rubber price, I think rubber prices are still high. Technically, I am not of the opinion that rubber can stay at 210, although it has corrected by nearly 30 rupees, but some more correction is possible. And right now, this is the off season for rubber tapping in Kerala. Rubber tapping peaks up from October, November onwards. So I am of the opinion that when we approach October, November peak season of rubber, at that point of time some more price correction can happen. I personally think that price correction is likely to take rubber down to a level of rupees 190 or so in times to come. Okay. Also, the international prices of rubber are currently lower than India, and therefore I am not of the opinion that rubber prices can go up very much from the current level. About 6 weeks ago, international prices were not lower than India, they were higher than India. International price has corrected much more than the Indian prices have corrected. International prices are down by about 25% from their peak level. Indian price has only come down by 10 to 12%. So I expect price correction to happen in India also. Now talking of the margin, in Q1, as for CEAT, I don't expect margins to improve at all. In fact, margins can go down further because of the halol impact, and also because rubber came off only in the last few weeks of the end of the quarter. but from Q2 and Q3 there could be significant improvement. Lots of price increases have happened. We have had 3 to 4 price increases in the during the quarter. The effect of that also will be fully felt in quarter 2 and quarter 3.
Okay, got that, sir. So just moving away from margins, just want to get your sense on what volumes have looked like, and I'm just wondering if your guidance of 30 to 40% growth for the full year, 20% growth in volumes, that more or less stands so far?
Growth wise, in the first quarter we have achieved 40%. So first quarter growth was excellent, and going forward we are of the opinion that growth will be sustained at this level. It could be higher than 40% for the current year in terms of top line. Of the total more than 40% growth that we expect, nearly 20% is going to be due to price increases and 20% due to volume.
Okay, so just one last quick question. There was buzz in the market last week that there could be some changes on the custom duty side for rubber. Anything, sir? Anything you've heard? Anything the industry has been involved in negotiating with the government?
Yeah, the industry has made a representation to the government of India for at least 1 lakh ton of natural rubber to be imported on duty-free basis. The current duty on rubber is 20 rupees per kg or 20%, whichever is lower. We were requesting the government that due to shortage you should allow us some import of rubber on duty-free basis, and there is a buzz that 1 lakh a ton of rubber will be imported on duty-free. But there is no confirmation to this news, and we are only waiting for the information to come. So far nothing has got confirmed.
Okay, so one-time import without duties is what you're looking at. So
That's
great
right.
talking to you.
That's
Thanks.
Right.
Thank you so much. Appreciate you taking the time to speak to us. That's the management of CEAT talking about various issues, possible duty changes, temporary duty changes, rubber prices, and what volumes are looking like. We're completely out of time on Power Lunch on that note. Have a great afternoon. We've got news continuing on the other side. It's actually buy or sell. So any questions you have, bring them in.